You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everyone. Welcome back to the Infinite Banking Mastery Podcast. Thank you so much for being here and for listening. I often get the question, who does IBC work for? Or does it work for everyone? Will it work for me? People ask that question usually because they think they're too old, or maybe they don't have enough to fund the policy as much as they would like to. They don't have a very high premium to fund the policy. If the person thinks they're too old, they'll say, well, can I just forget about me? Can I insure my spouse, my child, someone younger than them that they think they can get coverage on, like a niece or a nephew, maybe a sibling? So remember, you have to have an insurable interest in order to insure someone else and be the owner on that policy from the get-go. You can't just easily insure anyone. Sometimes people that reach out are concerned about their health, that they're not healthy enough to be approved, or that they will get a terrible rating. So being insurable yourself, having a healthy enough lifestyle and a healthy body to be able to get approved, that is a legit concern, because if you're not healthy enough, you will get declined. So if you happen to have a lot of health issues or major health issues, or maybe just recovered from cancer or something like that, that is more concerning to me if you're trying to get coverage over age. I think age is less of a concern to me when you're talking about, or you're asking the question, should I do this or not for myself? Am I too old? Age is less of a concern than the health, because you have to be insurable to proceed. Although oftentimes people might be really concerned, thinking, oh, I have high blood pressure or high cholesterol or something, I'm pre-diabetic, or they're very concerned about their health issues. And then turns out they end up being at least a standard rating, an average health rating, or sometimes it's even a class better. So I would say not to let it stop you from trying if you're interested in doing this for yourself and on your own life. When I'm dealing with someone who has this concern, or I'm talking to them and I can hear some concerning health issues that they've dealt with in the past or that they are currently dealing with, I will often submit something called an informal request to the underwriter, and I will collect information, just the health information that generally is collected on an application, rather than go through the whole process and then possibly receive a decline. I would rather submit an informal request to the underwriter and have him look through the health and medical information that we submit to him or her. And I always tell the person when we are doing this process to be as honest on the paperwork as possible, to really check any yes answer for any health issue that they've dealt with, and be honest and put details on there and how they're doing now and any treatment. The more detail, the better, because then you're going to get a better answer from the underwriter. So the underwriter will look through this and give basically his or her best guess on whether or not you're insurable and what that rating might be, or if they think that it will be a decline. Now, this doesn't mean that that's exactly what would happen if you do go through full underwriting, because this is just an overview, and oftentimes the underwriter will request medical records and things like that, and they're not doing that with an informal request. They're just taking a glance at the information to give you their best guess on the direction of the rating. So I find that really helpful to know, okay, if he thinks there's a chance, then let's go ahead and apply and see what the underwriter comes back with. For the rating classes, there is something called standard that's common amongst many companies, which is comparable to an average health rating. Then there are classes better than that, say 3 classes better than that, where if you're really healthy, you have an option to receive a better health rating, which really just plays out in how much insurance you end up buying to make your infinite banking plan efficient and work well. And also it helps the cash value to grow a little better the healthier that you are. But then there's about, say, 8 classes that are below the standard rating. Now, I can't say that's exactly the same for every single company that sells whole life, but that is what I've been dealing with. And the good news is that if you receive one of these lower classes, we're able to build still a great whole life policy designed for the infinite banking concept up to 4 classes down. So now anything below that, we're not going to be able to structure it for the infinite banking concept, but you still can acquire the whole life policy and build it to the best you can, and then use the cash value, borrow against it, and do all the same actions that you would when doing the infinite banking concept. You just won't be able to structure it in a super efficient way for the cash to grow more quickly in the beginning. But you still can use the policy. You could use any whole life policy and be able to borrow against it and do all the things that you would want to do with the policy to create more cash flow for yourself. Some people get super frustrated, super upset when they get a lower rating or a lower rating than expected, or maybe they think they're pretty healthy and then they got a lower rating. This happens sometimes. And they're really bummed out, but actually we should still be celebrating because you're insurable. And especially if we are still able to structure the policy for use with the infinite banking concept. So if you decide to go through underwriting and you get a worse health rating than expected, don't be discouraged or feel like you can't implement the strategy now. Instead, you should celebrate and put that coverage in place ASAP, because you may be uninsurable in the future. Sometimes people get so discouraged that they just want to put it off for now and try again later. They say, well, I'm not going to move forward at this health rating. Instead, let me try in a year or so for a better health rating. And that's something that I definitely would not do. Instead, what I would suggest is to put that coverage in place and then do your best, get healthy, do what you can, try to get in better shape, and mostly for you. So you have better lifestyle, you have longevity, all that's going to be good for you. But when you're doing all of that, then a year or so from now, or from when you get your policy in place, a year or more, you can always go through the health underwriting again and try for a better health rating. If you do get a better health rating, then that new health rating will be applied to your existing policy and you will be able to recognize the effects of having that better health rating. You'll notice it in your cash value and your death benefit. It will just improve. But if you did not get a better health rating, you go through all of this, you work to improve your health and you go through underwriting, and maybe the health rating ends up being worse for one reason or another, they will not take away the health rating you already have on your existing policy. You simply won't be able to improve it. So you'll be able to retain what you have and keep your current rating without losing it, even though you go through health underwriting again 1 or more years later and it ends up being worse. Well, at least we got the coverage in place when your health rating was in a better place and you're doing and taking actions to have a better lifestyle and better health. So really, when thinking and pondering on who can you cover for this strategy, whose life can you put this coverage on to implement this strategy, if you're a working adult, if you're a head of household, if you're earning income, you have family, or your family is dependent on your income, you should definitely try to obtain coverage on yourself. Even if your health rating isn't as favorable as you would like, at least you would have that policy in place to protect your loved ones as well. And up to 4 classes lower, it can still be built for efficient use with IBC. Now, of course, if you're uninsurable, we can look to other people, family members, to see who we might be able to insure. And you can be the owner and funding the policy and then insuring that other life so that you can still utilize this strategy. If you're older, we can do the same thing. We can look at options on your life, and also maybe we place some coverage on your life. Maybe we place some coverage on other people in your family. It just would make sense to insure, or with whom you have an insurable interest. When the cost of insurance is more because of older age or because of a lower health rating, when we're building this policy for the infinite banking concept, we are just shrinking the death benefit to make the contract as efficient as possible. So it doesn't have as detrimental of an effect as you might think, or it maybe doesn't make a big deal at all. And another thing is that if you do get a worse health rating than you had hoped, or a lower than standard health rating, a lower than average health rating, the good news is that the health rating doesn't apply at all to the paid up additions. So the base premium is the only thing that's affected by your health rating. The paid up additions isn't affected at all. So it's just a small portion of that premium that's affected by your health rating. And the other side of it, the paid up additions, which oftentimes is more than the base premium, and usually is if we can structure it that way, isn't affected at all by your health rating. So that's awesome. So in summary, whether you would start out with a lot of funding or very little funding, whether you're trying to cover yourself, your newborn, your older children, your spouse, your parents, as long as you have an insurable interest on someone, your business partner, your key man at your business, whether you're younger or older, infinite banking can work for you. If your health isn't the best, infinite banking can still work for you. We can put a plan in place to try to get an improved rating in the future as well. So if you put a plan in place today and you don't like your health rating, we just plan to go through health underwriting in a year or so and then improve that rating. So we have a whole plan for improving that, but at least we've locked it in case for some reason you aren't able to acquire a policy a year later or something else happens to your health. At least we've locked it in. IBC can work for just about anyone as long as you can get approved. But the real question is, do you want to own the banking function in your life? Do you want to be in control of your capital? And if so, how much of your capital do you want to be in control of? Nelson always said it was important to be in two businesses, the business where you earn your income, your business or your career, whatever that might be, and also to own the banking function of your life, to be in the business of banking. So if you want to put a system in place where you can better protect your money from the current banking system and get your own banking system started, then you should begin a policy or more than one. Nelson Nash said that your policy would likely become a system of policies, not likely to be just one policy in your lifetime, although it could be just one. But usually, as you grow your system, you end up with more than one policy. So if you're ready to start this process and you do want to own the banking function of your life and run more of your money through your own banking system so you can capture the earning power of those dollars, so you can capture the extra interest being paid and benefit from the interest being paid on the dollars that you're borrowing, then reach out. If you'd like to work together, I'd love to meet you. You can reach out to me at Valerie@alphaomegawealth.com. As always, thank you for listening, and I hope you have a great week.
This is thepodcastfactory.com.